Hello.
Hey everybody.
Hi
Steve, how's it
guys.
going?
Good. Hello. Happy Monday.
Indeed. Happy Monday, everybody. Today's March 12th, 2018. Welcome to another edition of the Office Hours with myself, Steve Gomez. Thanks for the intro there, Scott. Before we get into the good stuff, just want to take a brief moment to get through the legal mumbo jumbo here, and just want to make sure everybody is aware that all the things that we share with you in this webinar, as well as all the webinars that we host, strictly for educational purposes only. If you do need specific investment advice, what to buy, when to buy it, all that good stuff, please seek out a registered investment advisor or some other licensed individual to help you out with that type of stuff. All right, so before we get going here, in case there are any new people out there, and of course there always are, might be experiencing trade ideas for the first time, kind of kicking the tires. I just want to take a brief moment here to let you know that not only do we have the best scanning software out there, but we've got a nice community built around that technology. It all kind of starts off with Barry's Trading Room, hosted by Barry Anderson. He opens up the trading room about 30 minutes before the open and trades all day, uses Trade Ideas technology, and does a really good job at moderating a crowd of 600 to 700 people in there on any given day. So that community continues to grow. Matter of fact, we're going to be having to upgrade the software to accommodate the crowds pretty soon here. So the nice part about the trading room is that it doesn't cost anything. You don't even have to necessarily be a Trade Ideas subscriber to get in there and see what's going on. So if you haven't done that yet, I would highly recommend it. Of course, today's Monday. You got myself along with Steve. Tomorrow, Steve's going to take the helm. Trade of the week is Tuesdays. Andy Linloff rides shotgun with him. Then on Wednesdays, we always like to change it up just a little bit. Bring in Mr. Dan Merkin, the CEO and founder of Trade Ideas, along with Brad Williams, the CTO. Always good to hear what those guys have to say. Thursdays, Andy rounds out the 1 hour webinars on Thursdays with the Trading Studio. Been getting quite a good crowd in there as of late, and of course I ride shotgun with him. And we round everything out with a Friday support session, which is a 3 hour, 11 a.m. to 2 p.m. Eastern. Basically anything Trade Ideas related. I could say almost everything, about 95%. Some of the more advanced stuff we aren't covering in that yet, like Brokerage Plus, but as soon as that comes out of production, probably we'll be covering that one as well. All right, so that's kind of the agenda with all the webinars. Now, what's not on here are the additional webinars that we've added for new users, which are running 9 a.m. to 10:30 a.m. Pacific Standard Time. So just tack on 3 hours for Eastern. So I think that's what, 9 webinars that we're hosting every week now. So
Yep.
come on. All right, today's class, of course, market recap, see where we've been, try to figure out where we might be going. Got some cool stuff for you guys today. We're going to go over Holly, and then it was dropped on me earlier today. Got something new that's going to be coming down the pipeline regarding Holly. So you guys are going to get a little peek into that. Of course, we'll talk about Holly's performance today. You know, expectations were kind of slippery right off the bat. I'll go into detail on that. If we have time with the additional Holly content coming into the mix unexpectedly here, I prepared a nice little segment at the end here for single symbol backtesting. If we have time, we'll get to that. If we don't have time, we'll put it in the quiver for next time. We'll just see how we go here time-wise. So, having said that, Mr. Gomez, if you'd like to kind of show us what's happening and show us that chart action, I'm ready to pass it on. If you're ready for it, let me
Sure.
try to do this without falling down here. And there we go.
That works. Let's see. Screen 1, clean. All right, so hello everybody, happy Monday. Steve Gomez here. You should all be seeing my screen. I'll typically go through them 4 main ETFs and kind of talk about what we see and maybe some observations along the way. I always like to start with the S&P 500. That is the benchmark, Big Daddy ETF to which all other funds are measured to. And what I've noticed, well, coming off the heels of last week, I was saying that this bounce here needed to dig in and become a new base camp at a higher level base camp. And what it has in sights is to come in to come up and take out these highs back here today. Well, yes and no is the question and answer. Did we do that today? Yes, we took it out intraday, but no, we actually closed about 30 cents below that prior high. So the S&P made it kind of tricky, but it doesn't mean that tomorrow can't portend what we call like a go, pause, go. Typically a go would be that green candle and a nice spinning doji, narrow range doji for the pause the remaining day. And then tomorrow, what I would say, based on a go, pause, go, the way you can trade some of these things after a big move and then a doji the second day, is look at the bottom end of today's doji and the top end of today's doji. And if we take out tomorrow the bottom end and start to pull back, well, then we could be in for a 2 or 3 day pullback, maybe come in and settle right down here on this blue 50 period, maybe even fill that gap. I'll just draw a line. So if we take out today's low in that doji, we could be in for maybe a little breath of a pullback to this level. If not, the go, pause, go, if we take out the doji on the high print today, that could be a continuation, and that's what the bulls are going to want to see, which would justify higher lows and higher highs as we move back up to the top end of this range, which is the segue for the granddaddy of them all, the NASDAQ. NASDAQ looks nothing like the S&P and the diamonds. NASDAQ went ahead and took out all-time highs on Fridays with some good job numbers. And so I had mentioned even back earlier in the week, even though this was a deep, deep, deep cup, looking kind of cup and handle-ish here last week as we come into this week in the NASDAQ and the tech-laden index of the QQQ ETF. And so a very nice push on Friday, and of course, it's all about the close. If we had pushed higher and then wicked all the way back and closed back in the range, that would have been a whole different story on Friday, but we didn't. The bulls showed their intent. Volume bars are kind of decent, graphically speaking anyway. So a nice close at new highs last week and a little bit of follow through today. So NASDAQ technology is where it's at right now. That's the sector, the baton holding strength that's holding this market up, and probably will be ready to pass the baton at some point. But for now, technology has the baton and running with it and dragging the rest of the market up along with it. I'll go right to the IWM, which also is pretty healthy. IWM did more than the S&P was able to do because it took out this prior high. And so now in the IWM and the Russell 2000, which of course is the small cap stocks, you guys, so this IWM ETF tracks the small cap stuff. We put in a low here and then we put in a higher low here. So it looks like that was in fact a decent base camp that was built and held because it pushed right through that prior high. So now what we've got again is higher lows and higher highs. We might be right back in the throngs of a continuation bull market, especially if the Qs want to remain strong. That being said, though, however, we looked at the S&Ps lagging a little bit. It's not quite back to all-time highs, but we really need to take out, like I said, this today's doji and continue an assault back to the summit here on the SPY. And lastly, the Dow is not looking that great. Of all the 4 indexes and the ETFs that correspond to those indexes, the Dow is probably the weakest. As you can see, it's kind of creating a wedge here. Here's our higher low, but in fact, we did not come up and even come close to challenging a higher high here at this level. Let's just move that. We can grab that and pull that down here. So, you know, the Dow is the industrial, the big 30. Definitely not as strong and hot as the tech, but the path of least resistance does remain up because we have the NASDAQ, you know, shooting to all-time highs, kind of dragging the rest of the market with it. And that's what I'm seeing. The Dow is the weakest of the bunch, and the IWM and the Qs are the strongest of the bunch. So, you know, if all things continue to hold up in this fashion, your small cap tech stocks, you know, could be interesting based on what these indexes are showing us. The volumes, real quick. Let me just go around the horn around the volume because I do like to do that once in a while and check what the relative. 0.6 on the relative volume today. We can even see that candle, that volume bar is pretty low. What about the Qs, the granddaddy? They did 0.76. So spiders, 0.6. Guys, we are levitating in price on anemic volume in terms of using the relative volume. Now, one of the 4 ETFs here that mirror the indexes actually got above their normal relative volume for the day. That would be expressed up here in this single stock window. Relative volume of 1.0 means that the the stock, or the ETF in this case, did a normal day's worth of volume. And even in the Qs, going to brand new highs here, they did it on 0.76 with 1.0 being a normal volume. So that's a little bit of discouraging, but consider we have had a lot of big volume days here in the past, so maybe these numbers will slowly start to cycle through. But the path of least resistance remains up. I don't really see anything at the moment to put a bearish hat on. It just seems like this market's continuing to do what it's doing, looking at the economy and the numbers, but it's doing it on weak volume. Before I give it back to Jamie, let's just check in for tomorrow on the trade of the week. BOFI was last week. Here was our trigger signal, and did exactly what we had hoped it would do. This blue line up here is about a 10% mark, and that's kind of the upside target I wrote about in the weekly email last week. So if anybody's getting close, maybe on a nice push tomorrow, you could consider selling half or a third, and it's always nice to book profits. And then if it keeps going, well, you've got a little bit left in your quiver to participate on that. This week, and we'll talk about it more tomorrow, is Symantec. Basically, we just triggered the alert on the highs today, but I think we might just kind of chop sideways here for a day or two. The big news was that it closed above that declining 50-day moving average, and also as well, Symantec is a technology software company, which ideally we would hope that it could start to play catch up to the rest of the technology sector. So again, more on the trade of the weeks tomorrow, but I just wanted to kind of highlight, if you are in fact still in BOFI, maybe a nice push tomorrow could be an opportunity to take some off the table for a small change winner, at least on your first lot. And when you do that, it makes it a lot easier to hold on to the second and third lot if it does in fact want to go higher. Otherwise, just manage it appropriately. This is probably a good intraday level right here. You'll notice it was selling off and the buyers stepped back in. So 41.90 is a level of significance that probably could be watched going into tomorrow if we do start to bleed off, but good trade nonetheless. All right, Jamie, that's all I've got. Back to you.
Good stuff. Let me take the baton here.
You got it? Okay, good.
Alrighty, so hopefully everybody's got eyes back on my screen now. Okay, well, thank you very much for that, Steve. Good as always. So as Steve indicated, below normal volume on all the relative indicators, which kind of bled into my expectations today. Of course, I made the little comment here, chart conscious. When we do look at the SPY and what it was coming into today, and we of course didn't really have enough steam to make any progress there. Low volume kind of tails the tale there. So we have to always be conscious of where the footprints have been and what levels we might be approaching, and pretty clear here that unless we had some good volume, we weren't going to bust out of this little range here today, and of course that's right where we closed. Always need, it's possible that we could do that on volume or no volume, but hey, little volume always helps. Was not the case today. So what I'd also like to point out are, the expectations coming in after the first 15 minutes with the good old compare count windows that I like to monitor here. A lot of you out there may have heard me make the comment in the past, if we do have a stretched out move in the first 15-20 minutes, well, kind of throws those readings off a little bit. So what do we have here today in the first 15 minutes of the SPY? And of course, these are 5-minute candles. And of course, here's the opening bar here. So 5, 10, 15, 20, we just had a nice push up, boom, just off to the races in that first 20-minute period. Now, since we're trying to kind of get a little bead on what the institutions might be doing, well, we had some pretty bullish readings here, 59 and 60% to the green side. Typically nothing to sneeze at, but anytime we have a run up or a run down like that, that's going to throw those settings off a little bit. So, after the first 15-20 minutes, we're seeing lower than normal volume. We're seeing a run up to the top, and of course, just like magic, that did happen to be the top for the day. And even though we had the bullish readings on the compare count, wasn't that useful, all right, since we had this little run up here right off the bat. Of course, the low volume remained for the rest of the day. So, you know, anytime we're seeing things like that, or in my little world, my perception is, okay, we got the run up in the first 15 minutes. We're approaching some pretty, you know, significant areas on the daily. So, you know, in my mind, after the first 15 minutes, what were those things telling me? Well, it's going to be one of those double black diamond days. Sure, just like any day, there's going to be things out there, but you better be quick. You better mind your P's and Q's. So before we get into Holly here, everybody knows typically that this is one of my favorite windows to watch, the Turbo Up family with no resistance. And boy, quite a few symbols coming through here today, but not that many that followed through or set up properly. Matter of fact, out of all the symbols that came through here today, about 2. And by the way, Fernando, no worries. I'll make sure that I drop the compare counts into the chat area before we let you guys go today. So were there any good follow-throughs today on the long side, or any good continuations to be had? The only ones I saw were the following. We had PCTY, and of course, the good old Turbo Up family, no resistance, identifying right here in this little area right here, as we had the run up here on the open, and then this little flag here, and we had the range break, and we did have a nice continuation. All right, plenty of time to take some off the table there, all the way up to here. But guess what? If you didn't take the cookies, you know, we came all the way back down to the entry. So a good example of one that looked beautiful on the charts. And of course, if we were looking at the daily here, since it's coming from this window, we're also going to notice that overhead resistance, which is a nice attribute to have. It certainly doesn't guarantee anything. And of course, we did get the run here and then all the way back down to the 0 point. Now, the other one that came through here today, this little guy tells a different story. You got 2 really good solid entries coming off right here, this little area. Very similar to what we saw on the other one. Not a whole lot of energy expenditure before we have that break, which is always a good thing. That ensures that we can take low risk on it. This little guy, different story. Nice run, took its little pullback, consolidated for a little bit, then went on to higher highs. So definitely some good volume in the XCRA today, 3.23. Forgot to look and see what the PCTY was earlier, but no surprise there. It's just that the XCRA, buyers had to step on in there and take more. And of course, when we're looking over here, you know, expending quite a bit of energy, but still going nonetheless. And a lot of the times people get spooked by these you know, consecutive candles here. However, we take comfort in the fact that we're getting a nice, cozy intraday signal with low risk to get us into that trade, and then let nature take its course. So typically a lot more quality plays coming through this window, but due to the nature of today, only a couple that really looked really good on the entries and offered a little bit of upside. One folded back over, one did not. No big surprise there. All right, so now let's talk about Miss Holly. And what I will say about Holly is, when I saw this strategy complement over the weekend, you know, after Holly made all of her adjustments from incorporating Friday's data into the mix, I was like, okay, we almost have a 50-50 complement of shorts and longs, which is a rarity, especially in the market that we've had as of late, but not quite 50-50 here. We had 5 and 4 respectively. So, you know, anytime I see things like this, which are a little bit out of the ordinary, kind of also makes me go, okay, does Holly know something that we don't, or is the data just getting so noisy from what we've been through with the little correction and then running back up, Q setting highs, everybody's just kind of waiting on the SPY, and of course, IWM leading the SPY as well. So, you know, just trying to play catch up here. Will we have to wait? You know, how many days will this take? If it takes it all, unknown. But anytime we see Holly coming to the party with, you know, almost a 50-50 stacked deck of shorts versus longs, you know, It means something. And today what it meant was, well, she wasn't really sure. Long opportunity, short opportunity could be there based on the back test. And of course, how many shorts did we see fired today? Only one strategy and one here. So let's just go ahead and talk about the one short, which was, by the way, a loser. And once again, a little bit of conflicting signals here. Number one, Holly called along in this one the other day, all right? Just the prior day. And today she calls a short on it and promptly gets stopped out for looking at the entry signal right here. Not a huge risk, but we can see she shorts it right here, gets in the money by just a hair, and then all of a sudden just turns and whap, stopped out and a move higher. Now, of course, if the day would have been a little bit different, looking at what's been going on here on CASA, could have been a different story, but once again, CASA turning in pretty healthy volume today. So, you know, on the other side, let me just say this, and then after Holly gets stopped out and we come pop these highs and get out of this little area right here, what comes across? Turbo up, family, no resistance. CASA comes through. All right, so we see Holly get stopped out, and of course we can always treat this like a trade around, sometimes in the opposite direction. Not saying that, you know, I took this trade today, but it is a very interesting observation. Holly gets stopped out of the short. Shortly thereafter, we're busting out of this range. Comes across one of my favorite tickers that, you know, high volume and the all-time high has to be met. And then we also notice as it's cruising through that level, the pretty off the charts relative volume number here as well. And then of course, just like the other ones, we get a nice run, plenty of profit taking opportunity. But if you don't do some type of risk management, back down to flat. So let's just go ahead and take a look at some of the other losers. So we had the loser in CASA, good loser, or a healthy little loser on the short side. And of course, we did have a loser on the upside as well today in the Anthem. And boy, this looked nice and tight, but it did break. It just happened to break to the wrong side here. And of course, it looks like Holly's, let me see, put a line right there. It looks like Holly's risk off and getting out with the stop outs. Not really anything, you know, not really saving any money here on risk on. As we can see here, risk off won the day and risk off finished. If we tried to hold everything down 2 points, risk off 89 cents on quite a few trades today. So 19 trades to get up 89 cents kind of coincides with what the expectations were. You know, I go out on a limb here and say, you know what, if you're a really active intraday guy, your plotter might look very similar to what we see here. And depending on your commission rate, you might be flat or you might be down a little bit in commissions, even though you're up gross on the day. So it was a slippery slope no matter which way you slice or dice it, but we still had some pretty decent longs come through Holly. We actually had a target hit today, which we don't see that very often. It's been a while since we saw the target hit
That's right.
come into play. And of course, I don't even think I've seen the little icon with the bullseye arrow there before. Now we can see here, boom, just off to the races in the you know, the 15-minute area right there, about 6:48, 18 minutes in. And this was one that just got a nice lift right off the bat and then cracked. That profit target was hit. And there was even a little bit more meat left on that bone there. Of course, this would be a good time to point out max profit during, you know, risk off a $1.07. You know, not that big of a difference there. But if we got out here at 59.01 and we came up here, that's almost another point of potential upside, you know, action that, you know, if we got out a half with Holly on the profit hit and maybe stayed in that other half, then we did have the option for another 50, 60, 70, even 80, 90 cents Of course, we don't top tick everything, but still some nice meat left on the bone after Holly got out of that one. And there's not a whole lot to look at as far as risk on. Obviously, these things did not continue in direct opposition to what we've seen last week, where maybe the markets are coming down, but the risk on, if you were in Andy's webinar last Thursday, did the exact opposite. It just kept floating upwards and upwards and upwards. So, Holly, as far as risk on, risk off goes, and what I did is I prepared a little chart just to let everybody see a helicopter view of how Holly has been doing. And let me resize this, and I'll just drag it over here. And we can see, the chart speaks for itself here. We're looking at risk off, right? And we can see Holly kind of flattening out here. If we switch this little guy back over to risk on, we can see she was trying to bust out today, but with today's performance, basically going to fall right back down into this little range. So whether we're looking at risk off or risk on, looks like Holly's kind of flattening out here. Maybe it's
interesting with all the volatility we had looking at the charts. When you look at it in that time frame, it doesn't look as bad.
Yeah, and of course,
Holly chart.
Yeah, we have to absorb that, wow, whether you're a human doing crazy computations or an AI with a human, once you have a whoosh like this and this noise, it's going to be harder on any system. Now, having said that, for those of you who are in here all the time, you know that we've been struggling with Holly's exits. Right? She's doing a great job with the statistical probability that she brings to the table with each and every entry, right? But the man with machine, and we always talk about how we're better suited with our eyes and our technical views of the charts, and we're probably a little bit better with that methodology at picking exits. And so we've been trying to improve Holly's exit functionality. And one of the ways to do that, obviously, let's go over the basics. Why does Holly get out of the trade? Well, the primary three, profit, target, stop loss, and timed hold. Those were the three that she started with. Well, then she started letting winners turn into losers. That's a big no-no. So we had to give her the ability to exit a loser and a winner prematurely with the profit save and the reduced risk. It's worked fairly well. It's produced the results that I just showed you on the chart. However, we must keep improving. We must keep improving. And we've done so. So what I'm about to show you guys is, once again, what's going on behind the scenes here. How can we improve Holly's performance on the exits? Well, for the longest time, we've known that when we back test the stock, and we come in here, and we set up our timed exits and our profit targets and our stop losses, well, there's always been the advanced tab over here, all right, that we could actually fold in another condition. Or maybe we wanted to fold in a custom formula, which has never been really possible. And if we could do it here, certainly not possible within Holly. So what I'd like to show everybody now is a little peek under the hood at what is coming down the pipeline. So let's focus on the following. Risk on, all right? And of course, this is going to kind of have one foot in risk management and the other foot in strategy fabrication using custom exits and custom created formulas for exit.
Right, because we're testing some new strategies here, right?
Yep. So we're doing both. We're testing exit criteria and new strategies, all right?
Exactly.
So everybody look. Risk on today, negative 214. And while we're doing it, let's just go ahead. I'm going to write these down just so I don't forget them. And we'll see if there's any risk off. Okay, so we're positive 89 cents on risk off. Normal Holly today. Down 214, risk on. So let me make a quick adjustment here. What I'm going to do, I'm going to pop over here. And of course, I get access to our test server. I'm going to go to the test server, click OK, and then I'm going to click. This should get it. I might have to respawn my toolbar.
No, it popped right up before you even left the channel, Jamie.
Okay, well, good. See, that's what it was supposed to do earlier when you and I.
But it didn't. Yeah.
Right. Okay. Now, Okay, are my eyes playing tricks on me? Because earlier I saw negative $2.14. On this version, today I'm seeing risk on positive 254 and risk off only up positive 19 cents. So what's going on here? Why is this different? Well, number one, the strategy complement is different. You're going to notice different strategies in here. Hammer today's strength. You're going to see some of these look like the good old core that we normally see, but this guy looks new. But even though these guys have the same name, they've got different exit criteria, and they might have been modified a little bit with some of those custom formulas. So we can see here quite a different looking blotter as well. And if this is the, let's just do this for easy reference. We'll just go all trades, and we can see quite a different blotter as well. JP, you know, some nice entries here. So you see, ladies and gentlemen, we're constantly working. We've been working on this for quite some time. You know, have to give credit where credit's due. One of the newest additions to the Trade Ideas team, Mr. Michael Noss, has been putting in a lot of hours on this, okay, and working with our coders to get this new functionality into the system. So far so good. Looks like it's working, but just wanted to give you guys a little peek at the hood and let you guys know that we're always constantly improving, making changes, trying to improve the system. We will not rest on our laurels. All right, we're going to keep improving this thing, and this is the latest one, so hopefully it's going to be available in the beta version. Can't give an exact date, but if it's this close already and I'm showing it to you guys, can't be too far down the stream. And in the future, you know, depending on, you know, what type of trading you might be interested in, whether it's swing, intraday, well, just envision with this type of functionality and flexibility in the system now, in the future you might have access to different Holly streams, swing trades, intraday, things of that nature. So just wanted to give you guys a peek.
Good stuff.
And that is the peek under the hood. So
Exciting.
let's get on track here. Let me pull this back over so I don't get confused. All right, so Holly, she's very busy today, and once again, low volume day. Can't tell you how many times, especially when I was a younger man, that I just sat there and walked out of the trading office like I was going to collapse because I traded an ungodly amount of shares. It was up nicely, but after it was all said and done, basically worked for free that day because you were flat after you paid for all your commissions. So that's kind of the day that unfolded today. Good opportunities were out there, but you had to be very, very quick and very precise with your entries. All right, want to remind everybody, don't forget about your new compulsory. So let me just get back over here to my today layout. Is under, you know, obviously the Holly thing here. So remember, we've talked about this in the past webinars, and we'll continue to talk about it, but that is taking all of the symbols that were in Holly today, and of course, let me get back over to the non-test environment. And let's see, did it keep all those trades, Steve, and then add the new ones? I think that's what it did. Let me just respawn.
That's what it did.
Yeah, and see my numbers aren't. See what it did this earlier?
When I went back, they were different.
Yeah. All right, sorry about that, ladies and gentlemen. Let me see if I can fix this. Well, come on. I am on the primary, and let me just
reset connection.
I guess I tried that a couple times, but it did not want to go back. There we go. Now we're back to the way it was. Okay. So it would definitely be in everyone's best interest to start taking all the Holly plays at the end of the day and then scanning the good old daily chart for the people that are interested in swing trading and multiple day holds. This can be a very great source for some really interesting setups. Of course, we don't have to go over all of them right now, but I will point out a couple of interesting ones. We've got Nutrisystem forming an interesting little pattern down here. Definitely one that I would keep on my radar moving forward as it tries to get out of this area here, and then it's got a date with a gap. Yeah, it could get into the little vacuum there if we get out of that little area right there. So definitely interesting. Let's see, the other one was MPSI, starting to look very similar. Once we get up to this level here, you've got this little gap to contend with as well. Nice tight ranges forming, which means, you know, obviously once we decide to take that trade, hopefully risk will be clearly identifiable, not too big and controllable. And of course, those were just two that caught my eye today, which brings up another good point, is that one of our other trainers, Sean McLaughlin, has been showcasing the Holly swing play library and building it. So the best way to keep up with that type of activity, of course, doing it yourself, nothing wrong with that, but you might want to tune in to Sean's Twitter feed. He's at Chicago Sean, because he's building a database and showcasing the Holly plays that are shaping up to be good swing trades. And he's doing it a lot more eloquently than I'm doing it here. Probably a little bit easier to understand from Sean, but I think you get the meaning here. So if you're not following Sean on Twitter, go ahead and do that, and that way you'll be in the loop for that content as well as all the other good content that he's pumping out over there. All right, Steve, just checking on the time, and yes, I was hoping that we had time here today to get into a little bit off the beaten path topic here. Single symbol backtesting, and exactly what it means. So let's just do this real quick, and let me find my window here. All right, so single stock backtesting, you know, and just to compare it to what is not single stock backtesting, usually when we're testing our event, we articulate it into our alert window, we're looking at all symbols. In other words, this is the event that we've created. Throw this event out there, get the system to identify any stock exhibiting the event, and then of course we fold that into the backtest, right? But we can glean some pretty interesting information from single stock backtesting. So kind of what got me on this topic is the following. Especially last week and the week before, we've had a lot of these days, and let me just put this on a 15 minutes so we can look back without squishing too much up here. Okay, so not so much Friday when we had this nice little run up here, but some of these other days where we open up and we're up here at highs, and then we come all the way down to lower extremes and put in new lows, but by the end of the day, hey, guess what? We're back up to highs. Very similar to what we had here. We get a nice run that day on the SPY, boom, all the way back down here to maybe not brand new lows, but very, very close, all right? And we can go back and back, and we can see many, many of these days where we go down to lows, and then by the time the day is finished, guess what? We're back up at highs, all right? So that's kind of what's got me going down this path on the SPY, and I'm thinking to myself, well, you know, I've done some single stock backtesting with the SPY many, many years ago when I was doing a lot of automated trading back in the 2008, 2009 year area, if I can get that word out. And I always had a little SPY strategy running, and it always did pretty well, but I was so fixated on testing the systems and being in a gazillion things, I never really tried to develop it any further. So my thought was this: well, let's try to take advantage of these intraday swoops if we can do it with reasonable risk. And then I started thinking to myself, well, look at the price of the SPY. You know, even if we do get some good events, you know, I want to make this appealing to people who might not have extremely huge accounts. So what's the alternative? Well, the go-to, if you want to trade the SPY and you want something a little bit lower priced, is we just go to the SPXL. That's S&P long. If you want the short side, it's SPXS, but it's just simply the, you know, the ETF They call it a triple volatility, but when we look at the pattern, it's going to be basically the same. It's going to be pretty much a mirror. All right. So I initially started doing some back testing on the SPY, and then I thought, well, if it's working on the SPY, it should work on the SPXL. And just keep in mind, this is just where Jamie decided to start. Now, you can apply this to any single symbol out there, but this is a pretty good example here. So what do I have going on in this window here? Well, 75% pullback from high, which is mimicking that chart pattern that we were seeing on the intraday. When we nice little highs, guess what? We go all the way down, print new lows, or go all the way down to the previous low. A lot of the times that can be a 75% pullback from high since the open. Now, of course, no big surprise here. Single symbol, access that in the symbol list tab. We're only testing XPXL. Now, we go into the backtest settings. Of course, not just jumping in on the open. Give that first 15-minute whoosh time to settle out. And of course, when I first started backtesting, I did just chop off the first 15 minutes, but I had left it running completely wide open. But of course, as the backtest data came in, I quickly realized, well, makes sense not to take any trades once we start getting close to the 2.5-hour mark, which would be 9 o'clock my time, 12 o'clock Eastern. And then timed exits, all day hold. All right. And of course, it's up for interpretation. It still works when we start shortening the hold time, but what you'll see is the win success go up and the spread between winner and loser start to lose some traction there. Risk management, not capping the upside, but using a stop loss and using our smart stop and dollar amount for every trade. Back testing a 30-day period. So let's just see what this guy looks like.
The biggest hurdle is getting enough trades with a single stock, typically, right, Jamie?
Yeah, but the thing with a single stock is, what? Initially, if I get one trade a day from this symbol, that's great, right?
Yeah, I just checked to see if Marcia was in the audience. She was asking a lot about this last week, and I don't see her, unfortunately.
And of course, we don't, just because we don't get a trade every day, that doesn't mean it's not a good strategy, because we can start building other strategies to try to fill in the hole. What do I mean by hole? Well, first and foremost, look at these numbers, all right? Now, this kind of catches everybody off guard at first, 42.9% winners. But of course, the lower your percentage rate, typically, the bigger the spread between average winner and average loser. And this isn't an overnight hold either. This is just holding till the end of the day. So we got $1.42 on the average winner, and we've got 36 cents on the average loser. Now we've got this dialed in to do $5,000 per trade. When you're trading this instrument, $5,000 is $5,000 as with any instrument. So we don't need a whole lot of buying power either. At the most on a given day, we're only going to be maxing out what our one trade is, right? Which requires very little equity on a 4-to-1 level to get that done. Of course, we can adjust the trade here up to, $3, $4, $5 a share, and it still holds up. Of course, everybody's a little bit different. And then, of course, we're building in, well, I thought that was on 3 cents at first, but you saw I made the adjustment and not really taking that much away from it. Of course, the nicer thing about these more liquid ETFs is just that. They're liquid. And there's always typically plenty of liquidity on that level 1 to get the number of shares that you need there. Now, on the daily, we're coming through at 21 trades over a 30-day period. So not quite one trade a day, but if we're taking the trades as they come, which is the way we should do it on a system like this, not too bad. We're going to have our losing days like any system, but the winners a lot bigger than the losers. And this information is interesting as well. Biggest winning day, 437. Biggest losing day, -77. Of course, 4 losing days in a row, but when they're not that bad, and you're playing a system, well, the numbers kind of make sense here. And of course, you know, some of the older traders that have been around, I mean, and when I say been around, I mean a lot longer than we have, Steve. I mean, Peter Brandt comes to mind, you know, one of the more popular guys on Twitter for technical analysis. You know, you hear him saying all the time that most of his money on any given year comes from what? And I might be misquoting this, 20%, 25, 30% of his trades, right? All the other trades are basically paying your admission to entry, or what we could call your education fee, tuition fees. So when you start stumbling on the data sets like this, I mean, they're cut and dry and very simple. They're with liquid instruments, and we're doing it with basically the overall ebb and flow of the market, right? So, hey, you know, if you get the trade, great. If the trade doesn't come, that's great too. But over the long term, these events seem to have been working. Now, we just did the back test for 30 days. Well, what happens if we stretch it all out to max it out? So, ironically enough, our win rate goes up, and the spread between average winner and loser comes back in a little bit, right? So, you know, a lot of different activity, probably based on the fact that, well, we've had some, we had to fold this into the equation and the run up here. But all in all, not a very bad data set to look at. And of course, I had another one configured here. Let me see if I can pull it up real quick, since I changed my resolution on my screen and my other window seems to have disappeared into a hole that I can't find. So if my cloud will be kind enough to load for me, I had another one here with a completely different symbol. All right. So this guy right here, we were looking at just the good old, basically what is the S&P, using the SPXL just to get a little bit more leverage. But FAS, hey, what about financials? We all know the financials have been the darlings, right, for many reasons, which we won't go into detail here, mainly because they always either make money or get bailed out. But FAS, daily financial, bull, right? Another fairly liquid ETF. Once again, we've got the simple 75% pullback. We've got it pointed here and very similar trade instructions. Let's make sure we're on a 30-day here. Okay. All right. A little bit lower on the percentage value, and while we're doing that, I'm going to go ahead and flip this guy back to the 30-day, just so we can see here. When you start finding things like this, it's almost like filling in a patchwork quilt, because if we're doing one back test on the SPY and we're getting some good trades, but we might have some, you know, some days where there's no action, well, we can start to fill these holes in. So if we look at this guy, all right, well, he's trading even less than the other one. But imagine if you're running all these guys together, you know, if this was translucent and we could start stacking these guys on top of one another, eventually we could fill in a lot of the space here. All right, so I hope that makes sense. You know, by having a multi-strategy window is a great idea to do these things in, or whether you have 3, 4, 5 freestanding alert windows, that's just a personal preference. But by using these single stock back tests and breaking them down, you know, I went from the SPY to the FAS, all right, and you can see here that when one performs, the other one, when this one loses, this one makes. Sometimes when this one trades, this one does not, and vice versa. So a lot of people are starting to do this. I just had a training session with a guy the other day, and we went over this, all right, and he's just, I'm like, just start filling in the holes here. You know, if this was translucent, you want to eventually have something happening on every day. And you might be able to achieve that with 2, 3, 4, 5 symbols. just another way to put a spin on it. And since we've been having a lot of activity like this, where we go down to lows and back up to highs, this seems to be working right now. And of course, if we did this one over the 60-day period, that's SPXL. Let's just do this one. How's this one doing over the longer term? And once again, performance is going to go up, and spread between winner and loser is going to go down. And of course, you could go back here and I could show you, hey, if you hold for 60 minutes, it still works, but the spread between winner and loser comes down, and the winning percentage goes up. But from a daily perspective, there's some alpha to be found in strategies like this. Now, sometimes a strategy you can flip, and that works. I believe, let's see here, get my window back here. All right. Okay, what takes me one mouse drag to do just took me 8 there, apologies. So what would happen if we took this guy and we flipped it? And then we wanted to see, would the same thing hold up on the short side? And once again, not quite as good because we're in a bull market, but nonetheless, low percentage, but on the ones that work, you got quite a spread there, quite an X factor between average winner and loser. Now, I'm not advocating doing this. We want to go with the trend, which would be long in this case, but just an interesting perspective, because over the many years that I've been using the back tester and the Trade Ideas technology, some of the things that worked out for the better and that had the longest lifespans were the ones that, on the flip, performed well as well. A lot of the times when we get into optimization and we flip it, no dice, but sometimes things like this tend to work with the flip versions as well. So I would encourage everyone, if you haven't been doing so and you're a premium subscriber, of course, start picking some ETFs, whether they're the S&P components, whether they're the specific sectors. Start doing some of those single stock back tests and see what you can find there. All right, so before I forget to do so here, there was a request.
We've got a couple of requests for the turbo and the other one, the compare accounts.
Yep, yeah, I will gladly drop those in here. Let me get all the gremlins off my screen here. Goodness.
Sure, David. Let me find that for you. Peter Brandt's a good guy to follow.
Yes, he is. He is.
Let me do a search. I know it's at least Peter to start with.
All right. So, where did my chat window go? Well, there we go. I found it. Eureka. Okay.
Not what I was looking for, too.
All right, so there's the compare count family, and we also wanted the turbo up family, which is right here. All right, both of those have been inserted into the chat area, so everybody should be able to load those links up and have those windows pop right up on your screen. Okay, so just checking the time here, Steve. Looks like we're pretty much at the top of the hour here. I think we're caught up on questions as well, unless I'm missing one here. All right, so Amin, did that question just come in, Steve? I don't think it's been.
Yeah, a couple minutes ago. It's probably worth maybe addressing that one before we scoot.
Okay, so just when to, let's see, I got the scan, you give me some examples. In other words, when is the setup appropriate on the turbo up family? So let's just kind of circle back around to those two that I pointed out earlier. All right. So, keep in mind the magic sauce between or in this little family of filters that's residing in the multi-strat window is we're looking for stocks that are making nice range breaks. And of course, I flipped this back over to 15. It's a little bit more obvious on the 5-minute time frame here. Okay, so here we have XCRA popping to highs in the first 5 minutes and then becoming range bound right here. But as soon as it starts breaking the new highs right here, and the volume is high because that's what the criteria of this window is making sure of, that 1 minute metric volume has to be high. So if we can find these range breaks or these bull flags as the penetration is occurring, the accompanying volume will then therein lies the magic right there. Of course, volume is not the holy grail, but in cases like this, it can act as the great equalizer and really take our potential for pattern continuation from a coin flip up to the higher percentage values. So that's just a very simple example here. Okay, so we are out of time. So Scott, if you're ready, we're ready for you.
Sounds good. So thanks everyone for attending. A couple items on the way out. We have a podcast, so make sure that you're subscribed to that. Just go to your app that you use to listen to your podcasts in and search for Trade Ideas Podcast. Add that to your subscription list. And presto! Then just download like the last episode. Jamie was on that one. And you'll be ready to get the new one when it comes out on Friday. There's a discount code that'll save you 15% off your first month or year of Trade Ideas. Just use Holly Madness, all caps, before the end of the month. And you can save. Those of you that are subscribers that would like to upgrade from standard to premium, also use this code on your upgrade. You can download a handout that has this code and some of the other information by expanding the handouts panel on your GoToWebinar interface, clicking on that link and getting it. Any questions, ask us at info@trade-ideas.com. You can follow the guys on Twitter. Today Trader Steve Gomez, QuantBot's Jamie, Dan Merkin's Trade Ideas 1. Find us on Facebook and like the page so that you can share everything we post with your friends. Trade Ideas Pro on Facebook. Thanks, everyone. We'll have the recording up later on tonight or tomorrow. Thanks, Jamie and Steve.
All right, thank you.